Good morning, traders. It is Wednesday, the 10th of June, 2015. It's 8:03 a.m. Chicago time. Sorry about the delay. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Uh, a fair amount of news overnight. Market had a little bit of movement, nothing drastic. The German Bund, we'll look at that in a minute for those who are trading the Bund stocks, DAX, Bobble shots. Um, we'll look at that. It actually finally got its continuation move that I'd spoken about last week, pushed lower, and German Bund yields have pushed through the 1% level, which we have not seen since September. With the Bund pushing through 1%, the euro took a bid and rose with it. The Bank of Japan's Kuruda says that the yen may not weaken any further on a real effective exchange rate basis. That's a very supportive comment on the yen. The yen showing strength overnight. The yen up 1.33% so far. There's some interesting movement there. Of course, a lot is tied with the yen as a key carry currency. So we're expecting some interesting movement today based on that. API inventories came out yesterday at 3:35 p.m. Central, and it showed a drawdown of 6.7 million barrels. This is the worst drawdown we've seen so far, and it's causing a bid in crude oil to continue. Crude oil already up 1.5%, 2.5%, up $1.52 at 61.66, approaching that last high I talked about 3 weeks ago. The crude oil weakened for a while, but it's coming back. Gas gas prices at the pump are rising here in the U.S. Uh, let's let's look ahead at what we have as far as releases for today. Oh, by the way, OPEC kept the 2015 oil demand growth forecast unchanged at 1.18 million barrels per day. I'm sorry, unchanged at 29.32 million barrels per day. Uh, as far as what we should expect today, we're looking for crude oil inventories at 930, expecting negative 1.45. Cushing inventory expecting negative 775,000. Gasoline inventories expecting plus 50,000. Distillate inventories expecting plus 600,000. And refinery utilization looking for 0.5%. None of this matters to you unless you trade Brent or WTI. We're looking for the crop report. The WASDE crop report for corn, cotton, soybean, and wheat today at 11 o'clock. Those who are in ags, you'll want to pay attention to this. Corn end stocks looking at 1.75 million. Expected soybean end stocks looking for 490 million. Sorry, corn end stocks looking for 1,750 million. Soybean end stocks looking for 490 million, and wheat looking for 800 million on the crop report. At 1 o'clock, we're looking for the U.S. monthly budget statement, negative 97.5 billion. And then at 4 o'clock Central, all times of Central, by the way, which is 1 hour behind New York. At 4 o'clock Central, 5 Eastern, we're looking for the Reserve Bank of New Zealand's official cash rate, expecting it to stay firm at 3.5%. As far as speakers, BOE's Carney is releasing comments at 3 p.m. Central, and then everything else. The Reserve Bank of New Zealand as well as the Reserve Bank of Australia are at 4 p.m. and 9 50 p.m. And then as far as the auctions, a pretty decent sized 10-year note auction today at 21 billion for set for noon Central, 12 p.m. Central, 1 Eastern. That's what's on deck for today. Let's shift gears and look at our technical side. A review of yesterday. Yesterday's Trader Bite went over the plan of a push. The expectation is for a push towards 83 quarter, 84. The expectation was for some decent resistance in this area. I did post, for those of you who saw it on Twitter, and I did show it yesterday, I did post a volume profile or a market profile chart showing why this area is important. These are monthly profiles. Each one of these series of letters and so on with a volume next to it represents a monthly profile. And you could see in February this was the point of control for the entire month. And then in May, we still built acceptance around it. We have an HVN here at 83 quarter, so it moved from 83.75, 84, 83.75 to 83 and a quarter. And then in April, we put an LVN, a low volume node, or a non-acceptance area. Once we've accepted it for 2 months, a non-acceptance area right at 83 quarter again. And then in May, we revisited and put in a high volume node at 84. This makes this a pivotal area, right? We outlined this in May, looking at April's profile, that this is a key area to test. And what we've done so far is we're kind of building around it. So we've shifted this down, this HVN down so far this week to 81.50. But we're likely to build around here for a little bit before we move on. Look at these profiles up top. If you look up top, this is kind of the same repetitive scenario where you have an LVN that turns into a high volume node, another bigger high volume node in the zone. So we're looking, this is the important area above us, the 96 down to 93 area. It's the next big area of volume. And then we build it even more in May, and then here we are in June with a fat area there. This is how the cycle in the auction repeats itself over and over and over. When the market establishes price acceptance, it tends to remember it. Prices do have memory. The market does have memory, and this is just another way to look at it. So yesterday, the expectation is we would push towards that 83, expecting some strong resistance on the initial test, looking for a rotation down to 72 and a quarter, the next area down. It pushed initially to 71.5, just 3 ticks below it. A nice pullback up into the range and into the mid, and then we put in a lower low to complete our extension move. And then from here we had what basically shaped up to be a failed auction. We pushed the IB low, or this first hour's low, by just 2 ticks when we saw buyers step in. You can see them in the delta here, stepping in and taking us right back through the range for basically what ended up being a neutral day. As long as it, at this point, once it pushed through, as long as it held the mid, which was at that time at the prior day's low of 78 and a quarter, as long as it held this mid, then 84.50 becomes your key target, and it went to 84.75. It ended up finishing in the middle with a profile that really shows some lack of consensus. There was a fair amount of trading that happened between 83 and 77 or so, but overall the top didn't look very good, the bottom didn't look very good. There was no taper, and you can see that sellers stepped in on the close to cover margin requirements. But overall, this was shaping up to be, since it's neutral with the second break on the high side, we were looking for this 84.75 to be taken out overnight, not with too much not with a high probability, but it's more likely that it would take out the 84.75 than not. Um, Carrying the story over into the overnight session. Now, there's a fair amount of news on the overnight. Here's Bank of Japan's Kuruda pushing the yen. It came back to 84.75. This is the test that I was just talking about. Pulls back to the close of the session at 80, and then Europe kicks in, and then we have this rally which we've sustained. Overall, the profile overnight shows that prices are being accepted higher, and it's likely to continue to rotate higher into the open. So, coming into today and knowing where we are, look at what we've done so far. We've had this pullback all the way down to this to the 2070 area, and it looks like it's time for it to rotate back up, as I had talked about on day trading radio on Monday. Looking for a test of 2101.50, and resistance begins in the 93.75 area, and through this big 95.50, 94 area that we've constantly talked about. There's a lot of volume that goes through this area, and so the initial target becomes 2101 on the upside, and then the key target above that's 2112, which brings us back into this balance zone that we put in from the 26th all the way to the 4th last week, right before non-farm payrolls. So this is the area that still remains to be tested from below. The market condition overall on the selling is that the buyers are pretty interested as price has dropped. I've seen a lot of lifting on the tape. You can see this type of thing very well on products like the S5 Bookmap and so on. And I'll show you that product momentarily or in the next couple of days. But you can see the participation on these on the sell side. As the market grinds down, you can see bids coming in and actually taking the trades into the bid and then quickly lifting the offer, showing some aggression there as prices drop. This is what we expect from this market. This is what we expect from an orderly market. We expect that as price drops, there's more interest from buyers and there's less interest from sellers, causing a taper in that profile. So if we look at what we've done since we broke out of this balance up here, right, as we revolve back up, the expectation is that as price goes down, if there's genuine interest, as price goes down, there's a taper that takes place, and then there's a quick push up. We don't have a great low from yesterday because the push up was pretty strong, but it lingered here quite a bit, leaving us with this high volume node at the low. Not the ideal situation, but overall we would want a taper like this or a little bit better than that to see that the interest is in fact strong and the probability of it rotating back up and holding that low, keeping that low intact is pretty good. But for now, we're looking at this going back up to this next high volume node here in this area, which is at 93.75. So the key hypothesis today, the overnight inventory is long. The key hypothesis is today is I'm expecting this 89 quarter to be taken out. I expect some selling to come in. The ideal situation, because I think it's more bullish than bearish today, I believe 93.75 is on deck for today. The ideal situation is you get immediate selling response into this 82, 83 area, finding support and then pushing, and if it does, then we get a high probability of 93.75 playing out. The lesser hypothesis is that we do continue up as we're pushing up against the overnight high. Let's look at that again. You can see here we have a terrible high, very, very weak high with a point of control right up against the top of the profile. This basically says that 89 and a quarter has little to no chance of holding. The better situation is for it to drop, find buyers, pop up, and go to 93.75. But the more likely situation is that it'll grind its way up, go to 89 quarter, test down, which means that it'll probably test even lower before it finds support and turns back up. If it cannot find support in the 82, 83 area, then you're looking at, again, a retest of 78.50 and then a continued push back down into the 72. So hopefully I didn't confuse you with those, but the key hypothesis, responsive selling, finds support 82, 83, targets 93, that's 10 points, with the extended target being 2101.50. That's the primary hypothesis. Secondary hypothesis is it pushes up, takes out the overnight high, then pulls back lower, struggles at 82, 82, 83, and pushes down into the 80, 79 area. From there, if it does not hold that area, the 79, 78, 50 area, then we're likely to see a lower low than yesterday, and we're likely to repair this not so great low that we left behind. Those are the two key hypotheses. I always come in with a minimum of 3, usually 5. And again, I'll remind you, and I know this is boring for those who have heard it a billion times, it's just very important. The reason we have these hypotheses is it's very important to come in with some sort of a plan. It doesn't matter what product you trade. It's important to come in with some sort of a plan for the day. And then what that gives you is some sort of an anchor. It's kind of like showing up in the middle of a city that you've never been to. Knowing a monument allows you to roam the city freely and without too much fear of getting hopelessly lost, because you can always locate that monument as a baseline. The hypotheses are these monuments. It's something we test the market against. So as the market trades, we have some idea of what we expect, and then based on how it trades, it forms and improves our bias. I'm going to talk about this a little bit more on Friday at the AMA, or Ask Me Anything, the open AMA on Friday that I'll post. Everybody's invited to that. You can ask any questions, but I want to talk about why it's so important to go through this process of creating these hypotheses. This could be one of the key elements of your trading plan that is missing. So that's that. A quick look at the Bund. As we talked about last week, I had said that there's an impulsive move here with a low at 148.96. Market having a hard time staying below 150 on the Bund, and then we get this bounce. And at that time, I had indicated that this 148.96 has a low probability of holding. It's likely to push through that and make a lower low, which pushes yields above 1% on the Bund, and it took it basically an entire week from the 3rd of June till the 10th of June today. It took it the entire week to actually for us to get that extension plan, that extension trade. And here we are at the next target, 148.30, a naked point of control, and we pushed through it by 3 ticks, and it's found a bounce area. Beautiful stuff there. That's the market playing out as expected, based on just normal rotation expectations. Now look at the 10-year notes. If you've ever traded Treasuries, very interesting product to look at. Same thing. We had some strong movement on NFP Friday. 124.22 was the price, and we're looking for this to break lower and reach into the 124.17. 124.17 as the low. Look at the low today. 124.16 and a half is the low on the overnight session. It doesn't show up here because I show the day session. But if I switch to the overnight session, you'll see that it went right to this high volume node right here, 124.16 and a half, with 124.17 being the key target below. Beautifully played there. Basically went through by a tick. Very, very methodical. The Euro stocks overall bouncing back up off of that 34.11 area. And it's likely to push now back up to 35.50. That's the expectation for the for the euro stocks. And one last thing I haven't looked at or haven't shared with you for a couple of days is crude oil. We're trading July crude oil, and we've got a fair amount of strength here. This is one of my favorite products to trade now. Um, the chart is shifting, and I know I'm way over my time. I'll let you go in a second here. But crude oil beautifully returning to its last high, and I'm looking for a test of the 63.54. And as I'd said before, I'm looking for it to go up this thin zone to 66.52 being the next key area to test. I know it's a long way, but it's finally making its way back up there. And what you have here is a W formation with a higher low and pushing a higher high now. So this may be the pivot point where it's likely to continue higher. But crude oil looks fairly bullish to me for the intermediate range. Anyway, I'll leave you with that. Good luck today, and I'll catch you tomorrow. Take care.